a major regulatory driven bull market in crypto starting at the end of this year. But I think the big story in the second half of the year is we're going to see flows re-accelerate. And the reason for that is I expect the major wirehouses, Morgan Stanley, Wells Fargo, UBS, Merrill Lynch, to all come online in late Q3 or early Q4. And that's going to unlock trillions of dollars of assets that are going to come running into this space. I think it's going to be a big deal. Wall Street is now almost firmly behind crypto. That's a major catalyst. I think we're going to be fine either way. And there are these other catalysts, which we mentioned at the top. There's the unlocking of these Bitcoin ETFs. There's an improving macro environment with reduced Fed rates, et cetera. There are multiple tailwinds. It's not just the regulatory tailwind, but I think that's going to break in our direction as well. I'm just extremely bullish for the second half of this year in 2025.
Hougan begins by discussing the explosive launch of Bitcoin ETF at the start of the year, which marked a significant milestone in the mainstream acceptance of cryptocurrency. Despite a slowdown in inflows during the second quarter, the momentum remains strong, especially with the recent launch of Ethereum ETF. Hougan predicts that the second half of the year will witness a re-acceleration of inflows, driven by the entry of major wirehouses like Morgan Stanley, Wells Fargo, UBS, and Merrill Lynch into the crypto market. This entry is expected to unlock trillions of dollars in assets, significantly boosting the market's liquidity and visibility. A key point Hougan emphasizes is the misconception that all investors can readily access these ETF. While retail investors and independent financial advisors, often referred to as registered investment advisors or RIS, can invest in these products, wealth managers working for large platforms like Morgan Stanley cannot do so until their firms officially greenlight these ETF. This approval process is crucial because it involves the largest portion of the market. Currently, only about 30% of the market can access these ETF, yet they have already become the most successful ETF launch in history. The remaining 70%, which comprises the bulk of institutional assets, is expected to come online soon, potentially leading to a significant influx of capital into the crypto space. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Right, we saw the Bitcoin ETF explode out of the gate in January. We saw flows slow down a little bit in Q2, although they're still coming in. We saw the Ethereum ETF launch. But I think the big story in the second half of the year is we're going to see flows re-accelerate. And the reason for that is I expect the major wirehouses, Morgan Stanley, Wells Fargo, UBS, Merrill Lynch, to all come online in late Q3 or early Q4. And that's going to unlock trillions of dollars of assets that are going to come running into this space. I think it's going to be a big deal. People hear that Bitcoin or Ethereum ETFs launch. They assume that all investors can buy them. But that's not the case. Retail investors can buy them. Independent financial advisors who run their own shop, what we call RIAs, can buy them. But these advisors or wealth managers that work for big platforms like Morgan Stanley, they can't buy them until Morgan Stanley green lights the ETF itself. There's sort of like two keys that have to turn on, one at the SEC, one at Morgan Stanley. And the thing is, this is most of the money. So maybe 30% of the market can access these ETFs today. They're already the most successful ETF launch of all time. But the other 70% is coming online, and it's coming online relatively soon, is my best guess. I think there's a non-political bull market in crypto right now, as there has been for the last 15 years, right? Bitcoin hasn't gone from $0 to $70,000 on the back of political support. And it will continue to progress almost regardless of what happens in the election, Morgan Stanley, et cetera. But I do think the election matters. You know, I said a 75% chance of a reset, which was taking your view. Let's say it's a 50-50 chance of the election. And we know that the Republicans winning would be good for crypto, a regulatory reset. On the Democratic side, we don't know, right? We don't know yet. Will Harris embrace the Warren wing, which is hostile to crypto? or the more progressive, Ro Khanna style approach to crypto, in which case there'd be a regulatory reset. So let's call that a 50-50 chance. So add those together, you have a 75% chance of a regulatory reset in November. Otherwise, it's the status quo. And we've been doing okay in the status quo, but it wouldn't be good for crypto. But I think that's pretty good odds, right? I'll take a 3 out of 4 chance of a major regulatory driven bull market in crypto starting at the end of this year. I mean, it is notable, like the Harris campaign was relatively new and did float this thought bubble of a crypto reset with the Financial Times. It's received somewhat of a hostile response from the crypto industry, which I understand. But those media articles don't appear out of nothing. They appear for a reason. So I do think they're at least thinking about it, and it's probably going to be better than the status quo. The industry has come a long way in the last 4 years in an overtly hostile environment, right? And now we have more allies, as you said. Wall Street is now almost firmly behind crypto. That's a major catalyst. I think we're going to be fine either way. And there are these other catalysts, which we mentioned at the top. There's the unlocking of these Bitcoin ETFs. There's an improving macro environment with reduced Fed rates, et cetera. There are multiple tailwinds. It's not just the regulatory tailwind, but I think that's going to break in our direction as well. I'm just extremely bullish for the second half of this year in 2025. And you have to remember, a lot of those ETH people have taxable gains, so they can't reinvest 100% of what they sell into the other products. So there's going to be some bleed out. But that's a one-time story. I would look at the other side of the equation. Over $1 billion in 1 week is outrageous from an ETF perspective. It's happened 1 or 2 times in history. The BlackRock ETF is over $500 million. We're over $250 million at Bitwise. And I don't think that's going to slow down anytime soon. I probably had 6 or 7 meetings with advisory firms in the past few days that manage more than $10 billion in assets. And
right here,
there,
see?
Yeah, there you go. Exactly. Yeah, it was 10 a.m. Monday morning. I spoke with a $100 billion advisory firm, and they're thinking about how should they build their crypto portfolio. Their default position is probably going to be something like 2-part Bitcoin, 1 part ETH. They're going to hold both of these assets eventually. And like the BlackRock story said, I bet it will be in model portfolios in the next year or so. This is a multi-year story, but the first week was, from my view, a success, right? $1 billion into these new ETFs. And I expect flows to accelerate from there. I think it's going to eventually look like a big success. You have to look at what's happening in Bitcoin right now with Wall Street coming around with the Goldman Sachs statement this morning. That's driven in part by the success of the Bitcoin ETFs. And now we're having the same thing with Ethereum. All of a sudden, there's going to be thousands of conversations on Wall Street about what Ethereum is. Should we be building projects on Ethereum? I think you're going to see dozens of banks launching, tokenized treasury funds on ETH like BlackRock did. These ETFs do more than just attract assets. They move these sort of crypto conversations firmly into the mainstream. And I think we've seen that with Bitcoin. We're going to see that with Ethereum over the next 6 months.
Hougan is equally bullish. He predicts that the success of Ethereum ETF will spark a wave of interest on Wall Street, leading to the development of various crypto-related products, including tokenized treasury funds built on Ethereum. He underscores that these ETF do more than just attract assets. They also legitimize and mainstream crypto conversations, bringing them to the forefront of financial planning and investment strategies. Over the next 6 months, Hougan expects most investors to have some exposure to crypto, either through direct investment or via retirement and savings accounts that allocate a small percentage to these assets. Hougan also addresses the pace at which wirehouses are adopting these new crypto products. Contrary to the perception that they are dragging their feet, he argues that the adoption process is actually moving faster than usual. Typically, it can take a year or more for new ETF to be approved on these platforms. But with Bitcoin and Ethereum, the process is advancing more rapidly, indicating a strong underlying demand and a recognition of the potential these assets hold.
Most investors get exposure to stocks. Most investors get exposure to bonds. Most investors are going to have a small allocation to crypto. And this will introduce sort of a persistent bid into the crypto market because, of course, people put more money into their retirement accounts every month. They put more money into their savings accounts every month. And all of a sudden, this will just allocate to crypto. An important thing I would note for people who aren't familiar with this is completely normal. A lot of people wonder, like, are the wirehouses dragging their feet? Are their model portfolio providers being slow in adopting Bitcoin? Actually, the opposite is the case. Usually when ETFs launch, it can take a year or more before they're approved on these wirehouse platforms. We're actually seeing it moving faster than normal on Bitcoin and Ethereum. So this is the normal course of business. You and I have talked about this before, Scott, but most ETFs, their year 2 inflows dramatically exceed their year 1 inflows. And I think that's going to happen on Bitcoin. I'm pretty certain it's going to happen on Ethereum, and it'll happen on other crypto asset ETPs if and when we see those launch. Fed rate cuts, model portfolio adoption, leverage being allowed in these Bitcoin ETFs and margin. There's a lot of mechanics behind the scene. That's a big deal. Yeah, there's a tremendous amount of positive catalysts. And I think the market is just waiting for some of the election-related uncertainty to be removed. And they're waiting for, these mechanical steps at the wirehouses to actually happen. I mean, the speech was rambly and difficult for people to follow a little bit. But I think if you step back, and I've been thinking about this a lot over the past few days, if you step back and think what just happened at this conference, you had the Republican nominee for president who's leading in the polls saying we need a national Bitcoin stockpile. You had other senators or presidential candidates saying the US should buy 1 to 4 million Bitcoin and hold them. You had people say we should fire Gary Gensler. You had Democrats come out on stage and make the case for a reset of crypto. And you had the Harris campaign leak stories to the press about resetting their relationship on crypto. And then this morning, you have the CEO of Goldman Sachs coming out and saying that Bitcoin could be a store of value.
That completely.
Yeah, it came out this morning on CNBC. So we have, the world's largest asset manager being a major believer in Bitcoin, the CEO of Goldman Sachs saying it could be a store of value. You have the presidential nominee for the Republican Party announcing building a Bitcoin Fort Knox effectively. These are just incredible. 20 months ago, it was FTX, and now we have this. I don't know. I think we have to reset our view of what's possible in Bitcoin. All of a sudden, the crazy ideas of, $500,000 Bitcoin, $1 million Bitcoin have to be within the Overton window of possibility based on the conversation on the ground. 100% true. If you put this into another industry and imagine, does he know the technical details of, gene editing? Probably not either, right? We're just so entrenched in crypto that we expect it. But it was overtly positive. And it wasn't just Trump. There were so many senators and congressmen at this Bitcoin conference. Tim Scott, senator from South Carolina, is line 79 on the conference speaker page. There were so many they had to stuff in there. I mean, it's absolutely incredible. I really do think, even the most hardened Bitcoin skeptics have to look at what's going on in the market, in DC, on Wall Street, and ask themselves, are they so sure that this is not a real thing? I mean, Goldman Sachs, BlackRock, senators, congressmen, both sides of the aisle. It's absolutely incredible to my mind what's going on right now.
Hougan touches on the broader macroeconomic and regulatory environment, noting that while there is some election-related uncertainty, the overall market outlook remains positive. He believes that once this uncertainty is resolved, and with the mechanical steps of ETF adoption by wirehouses completed, the crypto market is poised for significant growth. Hougan also reflects on the recent political discourse surrounding Bitcoin, including statements from prominent political figures and financial leaders. The growing acceptance of Bitcoin as a store of value by major institutions like Goldman Sachs and the discussion of creating a national Bitcoin stockpile by political candidates represent a dramatic shift in the narrative surrounding cryptocurrency. This shift, Hougan argues, could open the door to even more ambitious price targets and market growth in the coming years. Please like and subscribe my channel.